Well, it's a big week of business, as always. So let's bring in our business editor, Ross Greenwood, for the latest. Ross, good morning to you. So it does not matter where you look right now. The stock market, home prices, gold, Bitcoin, there are record prices everywhere.
Records, right? So that's the whole point about that. And yet, interestingly enough, interest rates, the continuing increase of interest rates is supposed to actually quell demand and not have record prices. But people are out there on a buying spree at the moment for all these things in anticipation that interest rates will be cut. Here's one of them. The stock market, even though it's down 1% over the week, has been at all-time record prices. Yesterday closed close to it. Today, it'll be off a bit by about 0.75%. We'll explain that in a moment. You go and have a look at, say, the gold price. Have a look at gold prices again overnight. This is over the past week up almost 17%. This is as people feel that inflation might stick around. They're looking for alternative assets rather than that record stock market, which they're getting concerned about. And so people have been piling into that. The other one is Bitcoin. Now, the funny thing about this is that there is almost no correlation as to why Bitcoin and the gold price should be going up the record levels at the same time, but they are. People are seeking alternative investments right now. And the reality is that money is now finding its way into markets that are hitting all-time record highs.
OK, we saw those comments from Jerome Powell yesterday. So what does it mean for rate cuts this year, Ross?
Well, it seems to be that every time a Federal Reserve chairman or executive speaks, that the markets move. And Jerome Powell, you're right, he said yesterday, well, I still think we're on track to have 3 interest rate cuts this year. But overnight, the head of the Minneapolis Federal Reserve, so Neil Kashkari, basically came out and said something quite different. So this is what he basically said. He was actually sitting there and looking at it and saying, well, he thinks still that there could be 2 interest rate cuts this year. But he said inflation continues to move sideways. That'd make me question whether we needed to do those rate cuts at all. And that's what caused the stock markets to fall overnight. The Dow Jones index has been well down overnight, and that really is the reason why you're likely to see here the Australian stock market fall at its opening today.
So the other thing I see, Ross, which clearly causes inflation, is a sudden rise in oil prices. That can't help any of this.
Can't help any of this either. So therefore, if all of a sudden you think economic demand's going to pick up, or indeed OPEC is starting to control the supply of oil, which they are, then you start to see this happen. This is over the past month. The price of oil is increased by 21%. $91.15, you're going to feel it at the pump, but certainly also inflation will feel it. So if inflation starts to come back again, guess what? Here in Australia, you can pretty much cancel any suggestion there are 3 interest rate cuts this year here in Australia. And in fact, more and more economists are now looking out into 2025 and beyond to sit there and say, when will the first rate cut come? And certainly right now, there is no suggestion, really, even though the official numbers say our economy is cooling, the reality is with these record prices, there's not much sign of that out into the future.
But back home here, the energy crisis and the critical gas shortages could see Australia without an ability to make something very basic, plastic.
Yes, so we only have one maker of ethylene and polyethylene in this company. That company is called quell. It's owned by a Chinese chemical company, which has now sold the operations off to an Australian property developer. Now, they've got key sites in Altona, in Victoria, just in Melbourne, and also in Botany, in New South Wales, in Sydney. Now, these sites are absolutely crucial. What they need, the raw material, is gas. And so industry right now is saying the lack of gas is making us uncompetitive, and that in turn gives Australia a real national sort of lack of competition into the future, a vulnerability, if you like. Have a listen.
And that's been a major concern for Qenos and a number of other manufacturers for a long period of time. It's been a policy failure in this amongst Australian governments that we've failed to secure and appreciate, and indeed with media as well, that oil and gas are fundamental building blocks for our modern way of life. They're not just used for consumption or combustion.
Now, while the Greens might be cheering the closure of these plants, the reality is Australia's economy needs plastic. And the reality is it needs a local manufacturer. If that closes, again, as I say, it's a vulnerability, and you just heard it there, a policy failure on behalf of government.
OK. Ross Greenwood. No golf this weekend, Ross. Bit too wet out there.
Unless you're a dead set duck, which sometimes I feel like one out there.
Yeah, me too. Talk to you soon, Ross.